Financial Insider Weekly. I am your host, Michael Gray, CPA. My guest today is also a CPA. His name is Bill Mitchell, and Bill represents taxpayers in IRS collections, audits, and appeals. He has offices in Capitola and in San Jose, California. Bill has also been licensed to practice before the United States Tax Court since 1978. Not all of us CPAs are licensed to practice before the tax court, so that is a special credential. Anyway, Bill graduated from Santa Clara University in 1962. After his service in the U.S. Army, he worked at the Internal Revenue Service from 1966 through 1971, and he's worked in public accounting from 1971 to the present. In his other life, Bill plays amateur baseball with the National Senior Baseball League. So, Bill, thank you a lot for coming and joining me today.
Well, you're welcome. And if any of my teammates are watching, they'll tell you I didn't have a very good year this year.
So. Well, it's good to at least be there for supporting the team.
Right.
Okay. Anyway, today I've asked Bill to provide some guidance dealing with IRS collection issues. And so we could say, in other words, I owe some back taxes. Now what do I do? So this is the area we're going to be talking about, and most of what we're going to be talking about also relates to state income taxes here in California. We're talking about the Franchise Tax Board. So you can apply many of the things that we're talking about in that case. Related to that, we're talking about highlights of a complex subject. And so this is just the beginning of another conversation you should be having with your own tax advisor, and we want you to consult with a qualified tax advisor about your situation. So with that, Bill, let's get started with our questions. All right. I don't have the money to pay my taxes. Does that mean I'm a bad person?
No, not really. I mean, it means that possibly bad things have happened to a good person. Oftentimes, there's incidents in life that cause a derailment of what's ordinarily a routine circumstance, large medical bills, death, divorce. Those types of things can send people off track, and possibly they don't file tax returns for a few years, and then they get their life back in order and want to get those tax returns filed. They get them filed, and all of a sudden here's an enormous tax liability that they cannot pay. So that's typically the circumstances that I've experienced in trying to assist people with dealing with back taxes.
And especially, I mean, we're dealing with sort of a rough time now in our country economically. So there are people who have become unemployed. They have had their homes foreclosed upon. Basically, they have had a lot of their net worth erased for various reasons. And so suddenly they're in a position where they just don't have the money to pay their taxes.
That's correct. I mean, there's so many foreclosures that those certainly can't all be bad people. They're having their homes foreclosed.
Right. Do you deal with the same people at the IRS related to this collection sort of stuff as you do for tax audits?
No. Collections are handled by a group, the collection division, and the people that you're dealing with are known as revenue officers in the collection department, as opposed to revenue agents under audits. So, and they're two separate units entirely.
And a different mentality also, I would think, yeah.
To some extent, the collection people do have awesome powers. There's no question about that, in that you've got liens and seizures at their disposal. Office of compromise is another tool. But it's been my experience in dealing with people that are coming forward to get their back taxes straightened out, that it's more of a collaborative effort to let's see if we can get things right for this person, as opposed to the audit situation where you're dealing in a more or less an adversarial circumstance where somebody's saying, hey, the law applied to these facts is this, and the other side is saying, no, it isn't. So at least in my dealing with the collection department, it's been, for the most part, very fruitful and congenial.
Oh, that's good to hear. Okay, well, let's. Can you explain how the collection process works?
Well, it usually starts out with the taxpayer getting notices that you owe money, and so you start from that point, either responding to that communication by letter or meeting, or because generally there's an address and a phone number that you can contact to get the matter underway to try and get it resolved. But from there it can proceed to negotiations to, we can't pay this all at once. Can the client have an installment agreement to pay it over a period of years? And again, the revenue officers involved with this will present something, and it's not always the most comfortable circumstance, but it's a technique or a way to get the thing accomplished.
Okay. So one thing that we should emphasize, I think, is there's a lot of correspondence that comes from the IRS related to this stuff. And so it's important to respond to those when you receive them.
Oh, that's correct. I don't want to get ahead of the thing here a little bit, but whenever you get a notice from the IRS, you should respond as soon as possible, immediately. We'll talk later, I'm sure, about the matters of office and compromise, where once that's being considered by the service, all collection action should cease. But it's not out of the realm of possibility, because I've experienced this where I've presented that to clients, and then they'll get a bill on another matter, and they'll
put that aside.
They'll toss it away, say, well, this is all being taken care of. You can't do that because then dire circumstances occur. And so the idea is, hey, you respond to that notice and say, hey, this matter is now under consideration by the offer and compromise group, and so until that's resolved, no further action should be taken. But that's, you have to respond to every notice. You can't let a notice sit there and say, oh, the IRS has got the wrong line on this type of thing. That may be so, but you should still respond and notify them of that, than to just let it sit idle.
Maybe we'll come back to this a little bit, but I think I'll move on to the next question because it sort of fits in with this line, and that is, what is the key to avoiding a horror story for your collection issue?
Well, that's communications again. Always address the issue and see if you can't get it resolved by meeting with the IRS personnel and getting some sort of I guess a state of affairs of the matter, and then go from there. As to, once you have that in mind, then you can decide which is the next best way to approach the matter for resolving the issue.
Yeah. So part of what I wanted to get at related to this is that when people are in this position that they owe people money, in particular we're talking about the IRS now, but usually when they owe the IRS money, they owe other people money too. And so you can get into a state where I guess we can call it a denial state or whatever, where basically I can't deal with this right now. And when we're talking about the IRS or even the Franchise Tax Board, that's really sort of a dangerous position to put yourself into.
That's correct, and you're right about that. There's almost a psychological factor to this, that it's something that the person has to overcome, and the IRS and the Franchise Tax Board aren't going away. They're going to be right there, and the Franchise Tax Board, for lesser matters, will even be more aggressive in the collection procedures than the IRS.
Yeah. So anyway, sometimes there are these notices include steps that the IRS can take along the way, basically notifying you about possible liens, about you have a certain period of time to respond or you may not be able to go to tax court. So when you ignore some of these notices, you may be putting yourself in a situation where you may actually be losing some of your rights. Is that right?
That's true. Well, collection matters aren't generally the subject matter of the tax court.
Yeah.
But you're correct. If you don't get after it, then things are going to snowball and get worse.
Yeah. Well, I just had this recently, by the way. The reason why it was a collection related to they're trying to get the guy's tax return, and so basically they made a substitute return for him, and they're saying if you don't respond, then you won't be able to go to tax court related to our substitute return.
Right.
And,
well, there are remedies, but that's the substitute for return matter. The terms are SFRs that they're using the service where if someone hasn't filed tax returns, for example, for whatever reason for a number of years, and there are forms 1099 that are out there that have been issued by payors to this individual, then the IRS will issue what's called an SFR, a substitute for return, and all of a sudden you have this enormous tax liability that may be totally incorrect, but you have to deal with that and address it. You can't just say, "Oh, that doesn't apply to me. That was not a correct number that they're coming up with." You may have expenses, you may have all kinds of things that go along with it, or it may be an incorrect 1099.
Yeah, and part of what's going on related to this, so there's the 1099, which is like an information return, folks. That's like when you get the interest statement for your tax returns from the bank. That's a 1099 form. But another source, for example, is there's information sharing. And so when you have a business, for example, the sales tax authority is telling the gross receipts to the IRS and to the franchise tax board, and then they'll just figure based on the gross receipts. Well, of course, you've got cost of sales, which is usually a huge number.
Right.
And so the next thing you know, you've got this huge tax bill. And so, again, you want to respond promptly so that you can reduce that number, maybe even to a loss.
Right,
Okay.
That's correct.
Yeah. All right. Well, what are the consequences of a late tax payment?
Well, obviously, you got interest and late payment penalties to start off with, and if you can get that taken care of by borrowing from a lending institution or even a friend or relative, it's going to save you in the long run than to let those rates continue to run with the taxing authorities.
Right.